Let's sort of like take this from the beginning, which is there a wealth inequality problem? Look, economists can't tell you if there's a right level or a wrong level of inequality, but there isn't any dispute that inequality has risen. So, for example, between 2000...
Are we talking about wealth inequality or income inequality?
So both have risen, but wealth inequality has risen more. And the difference is important. Income is like what do you earn,
right,
you know, from your investments and from your salary. Wealth is how much money have you accumulated over your lifetime or how much have you inherited. And there is a legitimate concern about wealth inequality. Wealth is the key to things like owning your own home, investing in a college education. It's about your ability to respond to a financial emergency.
Right.
And something like 80% of American families have less wealth now than they did before the last recession.
Which, though, Greg, as we've talked about, so my problem with comparing things to then is that people's wealth peaked because of the housing bubble in a way that was unsustainable. So is there a way to compare it today with going back, 25 years or something? I'm sure it's also increased, but how much of that reflects the unique nature of the housing boom and bust?
A little bit, but not all of it. If you went back further in time, you'd get the same trend, which is that over time, the wealthy continued to do much better than those in the middle. So, for example, since 2007, the wealthiest 10% families have seen their median wealth rise about 25%. So essentially what you've seen is those who depended more on stocks for their wealth have done very well, and those who had most of their wealth tied up in their home didn't do that well. So as you can see that the wealth tax has this resonance. It feels like a surgical response to where inequality has grown the most.
And what do you think the better response is? There's two specifically that you mentioned. One of them was actually something that Elizabeth Warren is talking about, because you're suggesting that it's sort of monopolies themselves driving inequality, and maybe we should be looking at those, which I thought was interesting, an interesting turn in the column. The other had more to do with capital gains at death.
Sure, yeah. So if you ask yourself why is wealth so high, one of the reasons is because companies are so profitable, and the people who own shares in those companies, who are primarily wealthy people, are doing so well. Why are corporate profits so high? One of the reasons is that we seem to have a monopoly problem in this country where there just isn't as much competition. And companies, whether it's in the hospital sector, whether it's in the retail sector, or whether it's like, Yahoo, excuse me, definitely not Yahoo, sorry, whether it's Google or Facebook, seem to do extremely well. So absolutely, bringing a tougher antitrust oversight to these pockets of monopolistic competition would be one way to spread wealth better. If you're going to go the taxation route, the problem with taxing wealth is that it's kind of like going in the opposite direction of where we've been for the last 20 years, which is trying to encourage capital formation, which in theory should be good for investment and wages. Why not take a much more careful surgical approach? There's something, for example, a lot of people do not know that a lot of wealth in the United States never pays the capital gains tax because it's essentially passed down from one generation to the next. So one thing you could do is tax the unrealized gain in capital at death. And that would actually raise a lot of money. And it probably wouldn't have much effect on the behavior of wealthy people because they're not thinking a lot about what are they going to do with their money after they're dead.
I'm thinking a lot of, I'm thinking a lot about this, Greg. I know we're out of time, but, you have people who may find ways of skirting it or just think, why can't I pass this on to my kids? Or on the monopolistic side, I think your Freudian slip was interesting, too, that, these companies, whether it's Microsoft, which we were all upset about, or Walmart back in the day, or, if Microsoft hadn't reinvented itself for the cloud, I mean, the smartphone came along.
I know. So you're kind of making the point that these monopolies don't last because the economy is very dynamic. And you might be right. However, I would make a couple of points. First of all, Microsoft's monopoly didn't last in part because there was tough antitrust enforcement action taken against it. Secondly, it's true that we had, for example, before Facebook, we had MySpace. Before Google, we had like Mosaic and Lycos. But those companies, they spent far fewer years at the top than Google has since then. So it kind of looks like monopolistic positions are lasting longer these days.
I think they're lasting less long. Because if you look at the number of time that the top market cap company in this country was at the top, AT&T, it was years, and IBM, it was years. And then now all of a sudden you have Amazon and Apple and Microsoft all vying day in and day out. And they're on the top for a shorter period of time than they used to be over the last 100 years.
Well, yeah, but most of those companies you named would have been in the top 10 or the top 25 or 10 years ago. I mean, Microsoft is a fascinating story. How many times have we written off Microsoft as an also-ran? It turns out that Windows monopoly that they've had for so many years continues to be very lucrative.
They're yelling at me, Greg. We got to go.
Okay, Kelly.
We'll pick it up next time. Thank you so much, Greg, from the Wall Street.